Good morning. It's indeed a real pleasure and honor for me to be part of this panel to introduce CPPIB and Prakul to all of you. As someone who has benefited from the partnership with CPPIB right from inception in multiples, I would like to say a few words about CPPIB. You know, the common understanding of CPPIB would be that they are very large. They can make a big difference to any GP by the size of check that they can write. They are global, they are in every asset class. But the way I would like to describe CPPIB is it is an institution par excellence. I really mean it, not because they have helped multiples greatly. In the last 12 years of our association, the focus, the clarity, the ability to stand by a GP and help a GP build an institution. When people change hands because people get promoted, they go to other offices, you almost don't see any difference in your interaction with the institution. For me, they are an epitome of what an institution should mean and stand for. So we are very, very blessed to have that association with CPPIB, and we've not benefited just from their capital, but there's just phenomenal learning in terms of how do you build global best practices and an institutionalized platform. Today, we are very fortunate to have Prakul with us. Prakul has spent over 10 years at CPPIB. Today, he has moved to India fairly recently to lead their direct investing practice, but he is part of the global leadership team, and he has worked in Hong Kong, he has worked in London before he has moved to India, so he's a CPPIB veteran, and we will have a lot to benefit from his rich experience there. CPPIB set up their office in Hong Kong in 2007. In just last 15 years, their AUM for APAC is at $145 billion, which shows the tremendous commitment they have to this region. And I think India is about a quarter of that, which is very, very significant as well. And as an institution, they are very big believers in alternative asset class. With that, Prakul, the rest of the session is all you going to be talking to all of us. So do you want to first begin by talking about how has CPPIB taken this bold decision of making a significant allocation to alternative assets? What has been their global experience on that?
Sure. Thank you, Renuka. Thank you, IVCA, and thanks very much for your kind words. Our association with multiples, as you mentioned, has been more than a decade long, and it's been a very mutually beneficial association. So again, thanks for your partnership, and thanks for your kind words as well. Just in terms of CPP's breadth of asset classes, Renuka touched on this a little bit, but just for perspective for the audience, we are a large fund globally, but we're also very well diversified, both across geographies and across asset classes. Here in Asia, we're quite focused in investing historically in China, India, and what we call developed Asia. But the asset class mix is still quite broad. So we invest across public equities, private equity, real assets, credit, and capital market strategies. So it's pretty diversified. And to answer your question, Renuka, the way this has grown is actually quite organically. We didn't start with a big bang approach saying we'll put what is now 200 people in Hong Kong and what is now 30 people in India. We didn't start with that approach. We started with saying that we want to build our footprint in this part of the world as part of our diversification strategy. And frankly, the individual investment programs grew quite organically as a function of that. And then we scaled our teams accordingly. And the numbers you described is sort of an outcome of that organic and bottoms-up approach. Obviously, we have at the top of the house certain kind of portfolio construction priorities, but the actual investing activity, like all of us in this room, is very bottoms-up.
Would you like to, if I look back on what CPPIB has done in India the last 10 years, it's been very strategic in terms of whether it is picking their GP partnership, which also you have expanded over time very systematically. On the infrastructure side as well, you partnered with some of the best names in the country. On the real estate side, maybe you can articulate what you have done, but what is likely to be the going forward strategy for CPPIB from this audience perspective? How proliferate would you be in terms of investing in funds and making direct investments? And how should we think about partnering with CPPIB for the benefit of both our industry and business and the economy?
Sure. So I'll say two things. Firstly, and again, you touched on this, partnership is pretty core to our investment philosophy. It's actually one of our 3 guiding principles at a philosophical level for the organization. And it's quite deeply instilled in every single investment group. So on the private equity side, alongside multiples, we have a number of other relationships that we're investing in and alongside for private equity investments. On the real estate side, likewise, which is how we started in India long ago, even before private equity. We started with setting up, platforms with, Shapoorji, Indospace, etc. And likewise for, our public team that started out with a big investment in Kotak Mahindra, very much a relationship with Mr. Kotak himself, et cetera, for the other investment groups. So I think the way we have gone about this is, I would say, threefold. One is picking best of breed local partnerships and putting a lot of faith and organizational momentum behind that. Secondly, taking a very active management approach towards investing. And by that, what I mean is obviously having a partnership-led business model, but then in our own right, being very much on the front foot when it comes to sourcing origination, diligence execution, post-investment asset management, and even exit. And we've gone through this full life cycle for a few investments now. So it's very kind of actively managed. And the third piece of that is to build a team on the ground. And I mentioned that we have about 30 people in our Mumbai office. Now, we didn't start with a large number. We sort of grew it very organically. But the idea is to sort of build it in this fashion. And then, we don't have any set milestones we want to get to in terms of, going from funds percentage of X to Y. I think we're going to leverage this very, very strong base of partnerships as we have been doing to frankly find interesting opportunities and then figure out the best way and the best asset class to get exposure to those.
Yeah. So Prakul, would you describe how you work your direct investments piece synergistic with your GP partnership across all asset class?
Sure. So maybe I can take the private equity business model as an illustration. So we are obviously a capital provider in the sense that we provide capital through our funds program as an LP and as a direct investor alongside our funds investing directly in businesses. But we don't want to be seen, and we are not just a capital provider. We want to be seen and we are a solutions provider. So we'll obviously provide the capital, but we also want to be able to provide a wider range of solutions for our partners on the ground, which means, for example, we could and we would like to provide bespoke liquidity solutions for companies in your investment portfolio. We would like to bring our other asset classes to the table when it comes to liquidity opportunities for your portfolio companies, for the fund itself, for LPs in your fund, and these are all strategies that we deploy globally. We would like to bring our global experience and knowledge base and bring that to the table for your portfolio companies and figure out a joint value creation journey together. And frankly, on our side, we would like to learn from our very reputed partner base so that we can be good investors alongside. So that's really the model. And again, it sort of wraps in this principle of partnership. And maybe I'll take another second to just describe how this is played out in real life. We typically tend to deploy our resource for the larger opportunities. And again, we've got some check size thresholds, et cetera. So for the larger opportunities, we'll partner up with one of our GPs and we'll deploy a full team. We'll run hard at diligence, execution, just like any other consortium partner. And we'd like to do that as often as possible because that gives us scale. But we don't want to ignore the smaller end of the market, right? We want to be able to continue to get exposure in that, but in a resource efficient way. And for relatively smaller deals, we'll do it in a more passive co-investment fashion where we leverage a partner's diligence and a partner's asset management capabilities. And if you look at our portfolio today, at least on the private equity side, we've sort of straddled the full spectrum. So we've gone very passive, smaller checks, very active, larger checks. We've also done a couple of solo investments. So we've sort of straddled the full spectrum, and we've also straddled the full spectrum from entry through to exit for a few investments.
Yeah. So again, as somebody who has worked with them on the other side, the clarity they bring in terms of what makes for a direct underwriting, what makes for a co-investment for the GP partner, and how can we really work together to solve the client's problem is a very, it's a business model that they have which brings enormous clarity to every stakeholder in the situation. Prakul, would you want to talk about the emphasis on ESG for CPPIB, and how are you making sure that your partners, whether they are strategic partners or GP partners, are delivering, and you yourself, what you're doing by direct investment is speaking to the philosophy of ESG in CPPIB?
Sure, absolutely. It's a very important theme for all of us in this room. I would like to believe that for us institutionally and globally, we've been a thought leader on this front. Firstly, setting the pace internally for ourselves and our portfolio companies and our partners, but then also hopefully setting the tone for the industry a little bit as well in that process. We have long evaluated and included ESG and sustainability principles as part of our diligence frameworks in looking at prospective investments. But for us, it goes beyond just diligence. Today, the whole ESG and sustainability framework, there's a separate team focused on it. It's embedded into our new investment philosophy for sure, but it's also embedded into our post-investment asset management and value creation philosophy. So we actually have real examples, for example, in our real estate portfolio in London, where we've actually added value to one of our portfolio buildings just by focusing on their carbon footprint and where can they save on energy costs. And this is a very real, tangible benefit that our team has provided to our partner in that particular situation. So the point is that it's not just a diligence thing. It's definitely not a tick the box exercise. It's very much core to our value creation philosophy. The other thing I would say is that, and this is very much playing out as we speak, this is also an asset class for all of us. It's an emerging asset class. A lot of us are kind of coming to terms with the implications of decarbonization, energy transition, renewables, what have you. Most of us are trying to figure out what this will mean for our investment activity in our portfolio companies. We have a focused team that's looking at this theme globally to figure out actually investments that we can make to get exposure to these themes, because this is a long-term, like multi-decade structural trend in the industry. And so, again, we don't have I would say, a specific approach on this front for India, but what we're doing here in India is essentially a reflection of this thought process globally.
My last question, so that we leave some time for questions. What has been CPPIB's experience relative to what you may have anticipated, when you came to India in the late, first decade of this millennium? And from that experience, what is the forecast? I mean, is the board and the organization more bullish on India? What should we expect in the next 10 years? And
sure.
What kind of partnerships, so that, and how do people here, position themselves or interact with CPPIB so that they can have a potential partnership,
sure.
With this prestigious institution? If you can throw some light, that will be useful for the members
sure.
of IBCA.
Sure. No, I think our experience, if I can call it that, in India has been supremely positive. We didn't plan our entry in a very thoughtful manner in terms of picking the actual time that we would enter the market, but if you look back, it was a very opportune time to enter India. It was an opportune time to be thinking from a diversification standpoint, but more so to have entered India. We were very lucky, as I mentioned, to form some great partnerships on the ground. That has been a key learning for us. That's an endorsement of our partnership-oriented strategy, and that will remain key to us going forward. We don't view counterparties on the other side as single deal counterparties. Even if you're across the table, you're a partner for us at some point from that point onwards, and we very much see it as a long-term relationship across the board. Our performance, knock on wood, has been strong across investment groups. We don't disclose India-specific numbers, but it's been across the board. We've had strong performance, and it's a reflection more of, I would say, just having, in addition to having benefited from our partner network, just being thoughtful in terms of picking our spots on where we'd like to invest, not spreading ourselves too thin. Hopefully, having avoided some of the FOMO along the way. And then just being judicious about relative value in this environment, because ultimately we are a global fund, we're a dollar-denominated fund, right? We report to our beneficiaries in Canadian dollars in terms of returns back to the fund and back to them. So just being very judicious on that security selection framework has worked for us.
Yeah. And any forecast on how the next decade will be? How deep will you go in India?
Sure. Look, obviously we have certain thoughts at the top of the house in terms of overall portfolio construction, but we are one pool of capital. We don't say India has to go from X to Y. We obviously have an expectation that the business here will continue to grow. The fact that we have a large team on the ground that has been growing over time is an endorsement of that. Our CEO comes to India once a year, if not more often. He himself, in John's case and his predecessors before him, have had personal, networks and relationships with, key business leaders in the country and with the regulators and the government. So I think that speaks to a lot of the endorsement that we give to India as a country. So I think the way to think of us as an investor from here on going forward is that, we have a large pool of assets on the ground already. I believe our carrying value is in the zip code of 20 billion Canadian dollars. This is a large portfolio on any metric that you may want to consider. But we want to grow incrementally from this, and we want to leverage, our inherent strengths, which I spoke about, our long-term capital, our partner network, and our global read across that we can bring from our portfolio companies. And we'd love to find opportunities to engage on that basis, either bilaterally or as, through our partner network as well, to build that out. We are very much open-minded in terms of deal constructs, in terms of specific asset classes. We're very open-minded in terms of, governance frameworks. But at the end of the day, we are a financial investor, right? We're not a perpetual investor. We do like to have a path to liquidity, just like a regular private equity fund would. But we obviously have a lot more flexibility than a closed-ended fund does, and we'd like to leverage that.
Just one quick, any comment on rupee depreciation, because that is a major pain factor for global investors. How does CPPIB think about it? Because I also remember from our experience that when you make a dollar commitment in a rupee market, you convert it into a rupee exposure. You seem to have a very special way in which you think about currency diversification and hedging for yourself. So any comment on that? That will be useful to us.
Yeah, Renuka, I wouldn't say that we think about it very differently from the other dollar-denominated pools of capital that are in this room as well. So we think about it quite similarly on the basis that ultimately we have to deliver a dollar, in our case, a Canadian dollar-based rate of return, right? So there is unfortunately no way of hedging that from an equity standpoint. And just like, again, many folks in the room, we have focused a lot on businesses that have some of that inherent diversification on the currency, export-oriented businesses, dollar-denominated businesses, et cetera. Where we don't have that, it doesn't mean that we focus only on export businesses and we don't look at the domestic universe. So where we don't have that basis, then we look at an X% return in INR and figure out what the corresponding Canadian dollar return is, and if that stacks up versus what our colleagues in North America might be looking at. So it's at the heart of it, it's very similar. We do have some hedging that goes on at the top of the house as part of our overall risk management, but that doesn't really drive our day-to-day investment decision making.
So a high rupee IRR is the only defense for the rupee depreciation.
That's right.
Yeah. Any question? We can take at least one or two questions before we wrap up. Yeah.
Sorry. So I'd like to double down on this idea of sustainability and climate as an emerging asset class. We heard a little while ago from Vishal as well that about a decade ago when we were trying to seed the tech investing ecosystem in India, the big questions was exits. Can you actually make money? At that time, we could look a little bit at what was happening internationally to say, look, yes, India is a new market, but this is the path that tech investments can take. What's happening with climate and sustainability is, in many ways, India's part of this emerging global asset class. As a investor in funds, how would you look at it? Is it just, are you seeing some things from other markets that's giving you confidence to invest in India? Is it just a bottom-up first principles? Is it something else? If you could lend some flavor on how you would look at returns in sustainability and climate, that would be extremely helpful.
Sure. I will put a huge caveat by saying that it's very early days on this front. And while I also said that we're trying to drive the thought leadership in terms of approach to the sector, we don't have all the answers, just like many others as well. But what I would say is that, at the highest level, the point I wanted to make is that we're not viewing this as something that is a diligence priority or is a value creation priority. It's actually an opportunity as well, right? And it's very early days, and who knows how this place will shake out and where the pockets of opportunity specifically will lie. But we feel that just like all of the disruption that we have seen in the last couple of decades, this is yet another pool of opportunity that is rife and ripe for disruption, and it's playing out. So that's one. The second thing is, I wouldn't say that this is a priority for India specifically. This is a priority for us globally. There's obviously a lot of stuff that's going on in India, more from a renewable standpoint, but there's also innovative technologies that are coming in terms of carbon capture and stuff like that, which we could look at in India, we could look at in Israel, we could look at globally as well. So I'm saying that the approach that we have crafted for ourselves globally, we will figure out in India as well. And then all the points that you mentioned around exit and what is a sensible rate of return and what is the risk reward, like this will need to shake out just like any other asset class.
So it's very, very heartening that a large institution like CPPIB came into India a decade back. They already have $20 billion of assets in our market. Given the expected growth rate in India and the fact that the industry has become a lot bigger, lot more institutionalized with humongous support from the entire ecosystem of lawyers, diligence agencies, and talent moving into the industry, we can definitely expect a many-fold increase, I would assume, from CPPIB. And Prakul, correct me, I'd also like to say that CPPIB's experience has been fairly positive. There have been no accidents in India and should have bolstered their confidence in India. So there is tremendous hope for all of us in the industry to walk this path and make sure that some of the, yesterday we heard OTPP, today CPPIB and several other institutions, and make this industry that would bring in $100 billion every year to channelize to Indian entrepreneurs. Thank you. Thanks to you, Prakul, for coming here, and to CPPIB for
Thank you.
backing
Thanks a lot,
India. Thank you.
Thank you.